Hello and welcome. Time for a gold and silver video. We'll take a look at gold against the dollar, against the Canadian dollar, silver against the US and Canadian dollar, as well as the gold to silver ratio. We'll start it off within gold, all bets, trades of the like within one's own each risk reward. And on the daily term time frame, this level of resistance that it established in the end of October and into the early parts of November had a very small failed breakdown here and is now reaping the fast move, but really not taking a slow amount of time, but decent move thereafter it. Market's doing its thing of giving traders or people looking at charts very good setups, because I always like to say, well, it'd be nice if it does something like this, meaning, oh, it comes up to the 18. What would be nice is maybe it can come down the 18 average of lows, settle in here for a while, then have a break of this resistance, which of course is like the entry point, and okay, have a small leg higher. Now maybe come back to where it came from within the 18. Okay, it did that. Okay, what would be nice after that is maybe it could just settle within the 18 and previous resistance for a little bit. It did that. And then break out above it. That's what it's doing. So things playing nicely by the book for the most part within such. It has just left the 18 average, so it's looking as if it's in the process of that of a leg higher. Within the weekly chart, well, this is interesting, because whether I count this as established resistance is very difficult to state. But either way, I would have to be counting a couple weeks ago, if not the first one, meaning trying to get the old reversal of trend. As we can see, all of these higher lows came into place, the topping at a big level at 1360, thus a big target area within this time frame. And what do we see within this downward? A water slide move almost every single week was a red candle down. In fact, from this point on to this low, the only green candle was this powerful up 0.17% week. So every week was pretty much down. From that of the middle of June to the middle of August, the entire summer, with the exception of the last month of it, was down. So then the band goes sideways to complete that summer. And there you go, established resistance, back to the band, looking to break it out. But I like this week how it just has a sideways week and breaking through. So to me, it looks as if this thing should be at minimum poised to at least test and even have a small break above that of the $1,300 level. And doing such would indicate that we have even a bigger resistance that follows. And when I say big, it's definitely such the case. So therefore, you have a spot where I like to see markets correct 18 and all that type of stuff. But in here, where you have this low and you have, of course, the high where the line is, you do so here. It held and stayed above that line. Yes, it had a little move below, but it recaptured it. And the same can be true here, but the key thing is it did such an event of making that of a higher low. The band for the last few periods has been starting to slowly decline, but holding this area now will stop that and at least make it go sideways, and prices above here will start to move it higher. When I see situations like this, higher lows like this, and this big level of resistance that this market has had since it first supported it in April of 2013, and then resisting it on 1, 2, close here for 3, 4, relatively close here for 5, 6 different occasions. So the more often you test a key level, the more likely it is you break it out. And when you do test it quite frequently like this, and it shows that major strength, then don't be surprised if you even have a bigger breakout at that, because in this case, breaking this level of resistance, we're talking about 3 key levels. Number 1, previous high. Number 2, a lower high Fibonacci retracement, lower high retracement, noticeably above here and noticeably below here. So pretty much in the middle somewhere. So a lower high rally, basically. And then the third one is breaking levels of resistance. And, well, that would be an interesting situation to say the least if that happens. So that is gold amongst the US chart. Let's quickly take a look at it on the Canadian side. Currently priced in at 1700 on the Canadian fiat side. And it's just roaring on the 4-hour daily term time frame. Broke this resistance. Nice move in here. Very small correction of the 18, but decent size move and continuing up. Within the weekly chart, now coming into what is a choppy up and down movement for the last quite some time in here. But we have resistance at about 1800. We have support at about 1500. So it's entering the upper end of this range right now. And now it's a very long-term sideways market range, 1500 and change, about 1800. Gonna have to break it to one side or another, but the market's moving higher. If it's going to have any type of correction, wants to show signs that this thing is going to revert, I would really like to see this hold and stay above, like between this area here about 1620 and this resistance here at about 1660. And when we look at this on the monthly chart, and this is where it gets very interesting. For when you have a market like this, and I don't have all the data, but this thing of course was going up since the start of the 2000s. Just a beautiful up move that established this resistance. This is the lower end of it, around 1646. Of course, the top is about 1900. This is pretty much the same as this. It's just right now, for the last little bit, it's been piercing below this area. But when this trend ends, it's like an ascending triangle. The possibility of having these moves, whether it's a grinding nice, working your way up through many solid periods like this, or whether you have 1 to 2, 3, 4, 5 large green periods, with most of them being the case, that's the type of things I'm expecting, is significant resistance breaks or a significant leg higher from that point. So just a very good overall setup amongst such. Let's now move on to silver. We'll do it first against the US fiat. And I'm going to do very short term, but very quickly. We can see up and down, choppy range, lower end of the support, about 14.5, upper end where we stand now, under 1485, but in the area of about 1475. The time frame on this goes from December the 12th to current, or December the 11th to current. So this is the last 9 or so, a little over 1 week of trading. And interesting pattern, because this is like almost like the reverse, what I call the Bart Simpson's head formation. It's like straight up or straight down, in this case down, and then chopping back and forth to complete that head pattern, and then going back to the neckline. And since then, I like how it's been progressing amongst this 18 average in here, showing a big level of established resistance at the high 14, in the 1480s range, in about that area now. So it shows to me, if I look at this on a longer term time frame, that breaking out can be really good. I can see more here. I can see a decent size range, and I'm going to see a bigger size range as I go forward, as lines will appear on the next daily time frame. But we got 14.5, we got the same 1480 level, and what has been a very beautiful uptrend. So a bullish flag sort of pattern from the rally that obviously was ending November into this current month, and there are those lines, and at some point it's going to have to break it to the upside or downside. If it's going to resist again, where do I like to see it hold? Well, the previous level of resistance here is about 14.5. That would be very much a big key, but it's been, it could very easily get above here and just have fast moves, especially when we take a look at things amongst the weekly term time frame. This has just been a little choppy side move, and there can be fast moves when these things are ready to go for getting it above here, where we're talking about going back to this congestion range, going back into the 16s. And then when I'm not gonna remove the lines. We look at this on the monthly chart. I mean, they're small as it is. It's barely below such. Any moves gets it to the 18. But this is looking nothing like that of gold. And within moves getting above like like in this case, if it's able to get above the 18, then that's a change of story, all that type of stuff, and having changes in volatility movement, well, that usually accompanies things as well. And when markets are ready to go, especially with like these silver markets, they can do just that. Now, of course, breaking this support, I've talked about how we could be going back to these lows. But we can see in here, when you have good gains, this thing broke resistance at 5 and it made a move up to 8.5. Then it broke that $8.50 or 8.25-ish, 8 and change resistance. Fast move up to about 15. And then, of course, the break of this resistance here at about 20 or a little under, it did a move to 50 really fast. So when it's ready to go, I'd expect the same thing moving forward, especially with what's been going on a fundamental level with things regarding stuff like keywords like price suppression and that of JP Morgan. Let's take a look at this against the Canadian fiat. And it's just in a more of a solid range amongst its monthly chart, back to close to $20 per ounce on the Canadian side, as we've got the 18 average of lows, 18 average of highs coming in close to 21. On the weekly chart, well, there's your downtrend, band flattened out, stage 2, resistance established. This is high enough where, yeah, whatever the high happens to be, that's what I'm going to count right now. It's $20 and we'll say 2 cents. But if it goes up to 22 over the next little bit, well, that's what it would be. But then come back to the band. So there's basically 2 ways this is going to revert. The easiest way is, as I state, like all those patterns, come back to the band, yada yada, break resistance. But the one thing I hate about trying to track this is you could very easily have these fast moves that just all of a sudden go and there's just nothing stopping it. It's probably the underdog, but when you have patterns like this that are showing a possible reversal of trend, it becomes more probable that events like this take place compared to the way it was maybe last month or many months before, or all the months before that, at least since here. On the daily chart for such, the resistance here, well, it got taken out. It got supported. It had a little bit of short-term resistance here, and it's just breaking that out now. So this thing seems live, ready to keep going for further gains as I'm looking at it. And when I look at this, and I say this a lot lately, but if you were to tell me, okay, you can put one asset class in a safe for 5 years, 10 years, 20 years, any of those choosings, and you cannot open it for that period of time. But then you'll be able to, it'll be all fine and yours. So if you want to put cryptocurrencies in there, that's fine. Put your public key or private keys in there rather. Okay, that's great. You want to put fiat currency in there? So be it. You want to put gold in there? You want to put maybe cans of sardines? Well, I mean, I'll assume you can put anything you want if you have large storage sizes. But silver would be really the only one that I could pick, because why would I want to put paper or plastic rectangles in a fiat currency that should at least be losing value when I find out things that are $2.99 today was $2.29 10 years ago, was $1.49 20 years ago, might be $3.99 or $4.29, and that's just a loss of value. And then you could have a major loss or a complete loss in hyperinflation, and those are becoming more probable events. So holding physical silver and physical gold in my possession is something, well, I'm happy that I've been able to do. Let's take a look at this finally with the gold to silver ratio. And I'm going to remove the volume in here. So within this, it's just choppy on the 4-hour daily time frame. We're getting some interesting movement. There's a line here, and it's a very important line. We'll see that more clearly on the longer term time frame. But as this stands now, this thing is holding at the upper end of this, which means gold has been overperforming that of silver. This usually happens, of course, when markets end up going down. I have to think that the only way that we can have decent size legs higher on this with the markets going up is if gold just has a day, well, mainly a week, month or quarter that is so phenomenal where silver just is unable to come close to its type of movements, where gold goes up 20%, 22%, and then silver might go up 7, 5%. Any of those types of movements. And we've been seeing a lot of that lately as it is. Of course, this going up usually is reference to both markets going down. It's just over a month. You might see silver go down 25%, whereas gold would only go down maybe 8 or 10%. On the weekly chart, this action has just been grinding its way higher, correcting within the 18, but it's been very little time within that point, and this is a big level of resistance, to say the least. My best guess is going to have a what I call the failed box breakout set. Well, whatever you want to use for the word set. But something where I would draw a line like this, because the market maybe goes up to 98 or something of that nature. And then from that point on, it goes back below into this area, and then a decent move lower. That's my guess, because I believe that gold breaking that resistance and doing all the stuff I've talked about, that's silver doing it, that silver's going to have more phenomenal gains, where you might have gold going from 1,800 to 3,000. Not quite doubling, but very good. And you have silver tripling. That's the type of things I expect. And then later on, gold just doubled over maybe a year and a half or something. And during that same time frame, silver's up 5x or 10x. I'm expecting more of those kinds of situations as we go on. Thank you for tuning in, and have yourself a great day. Bye-bye.